Between trading levels, with which candlesticks or patterns should we enter? Hello, I'm Tradiology. Please make sure to hit the like button and subscribe to my channel before watching this tutorial. Alright, let's get into today's lesson. In the previous lesson, we learned that we must draw the roadmap on the chart so we understand where we are on the chart. But our puzzle is still incomplete. We need to know what needs to happen on our levels so that we can enter a trade with it. We either need to see some good candles or observe a trading pattern and enter the trade after that pattern breaks. Some people ask, is it possible to enter a trade in this area without seeing a good candle or an appropriate pattern? The truth is, this method isn't suitable for beginner traders. Because you'll hit many stop losses and have emotional reactions that will lead to more losses. I strongly recommend that to increase your chances of success in your trades, always trade with confirmations. These levels already have a good probability of success, but since the price might drop slightly below the point where you're buying and then move upward, it's preferable to use confirmations. Alright, let's check out the best candlestick confirmations together. Large full-body candles, by themselves, are always among the best confirmations for entering a trade. That is, if the price is at a resistance and you're looking for an excuse to enter a trade, wait for a good full-body candle to form and enter with it. Another example is on a dynamic support. Don't enter a trade without a reason because the price might ignore your entry and cross the line. Wait for a good candle to form and enter a buy trade with it. Of course, my emphasis throughout this course is that risk management must be observed. The next confirmation candles are pin bars and a confirmation after them. I confidently say that the best and strongest candle I know is the pin bar candle, and it has high strength. To the extent that even if no level exists, a pin bar can change the price direction. Imagine we are at the bottom of a trading range. A pin bar candle forms. At this moment, you're ready to trade because you've seen the signal. Now you're waiting for a confirmation to form so you can enter the trade with it. This happens, and the confirmation candle also forms. Since you're both on a strong level and have seen the pin bar and confirmation together, the probability of success in this setup is high, and you can enter more confidently. But always keep in mind that the probability of success is never 100%. The next candlestick confirmation is the engulfing pattern. This pattern is when a green candle completely engulfs a red candle, forming a bullish engulfing, and if you see this pattern on a support, you can enter a buy trade with it. And by seeing a bearish engulfing on a resistance, you can enter a sell trade. Now suppose the price has gone a bit above our level, and we still want to enter a trade in these areas. Is it possible? Yes. You must use candles and patterns in the direction of the trend. I've explained the candlestick patterns, now it's time for trend-following trading patterns. Among the best trend-following patterns is the triangle pattern, which is a continuation pattern. That is, if we have an uptrend and you observe the price compressing from both sides, this is the triangle pattern. The triangle pattern is such that you must wait for it to break upwards and then enter the trade. Or you can wait for a pullback to the pattern's level after the breakout and then enter the trade. In a downtrend, similarly, if you see a compression like this is a descending triangle pattern, and it's more likely to break downward, letting you enter a sell trade with it. The next pattern is the falling wedge in an uptrend. This pattern, like the triangle, is a continuation pattern. A sharp move forms initially. After that, a compressing move downward forms, and by connecting the highs and lows together, the wedge pattern is formed. With a breakout of this pattern upwards, there's a very high probability that a new trend will start. The difference between a triangle and a wedge is that a triangle compresses symmetrically, while a wedge tilts in one direction and price exits from its corner. These two patterns occur very frequently on charts, and the one who succeeds in trading with them is the one who has seen them many times on the chart and can spot them at a glance as soon as they look at a chart. So we learned two important trend-following patterns together. I expect you to practice these two patterns a lot and understand how probable each one's success is. The best advice I can give is to draw a trend line. Now that you've found your trend, as long as this trend hasn't broken or hasn't reached resistance, look for downward corrections that resemble these two patterns. This way, you can find these patterns more easily and master them. Practice these topics a lot so that your trading journey becomes smoother in the future. Thank you for watching these tutorials carefully, and I, as the person creating these tutorials, am happy that you dear ones are following my channel. I ask you to watch the channel's tutorials several times, and if you're satisfied with the channel's content, please subscribe and leave me a comment. Thank you.